What's going on, everybody, and welcome back to the channel. So in today's video, I'm going to be talking about 3 things that you should be doing to prepare yourself to take full advantage of any weakness we may see in the stock market, whether that's over the next couple weeks or couple months. Now, obviously, everybody's talking about, will there be another stock market crash? Is the Dow going back down to 20,000? And to be honest, nobody knows this for sure. So if anybody's telling you that there will or will not be a stock market crash, they do not know what they're talking about. But what you can do is prepare yourself so that if there is a stock market crash, you can take full advantage of it and make some money, because that's what we all want to do. Now, I will be going over personal examples of mistakes that I have made myself. This way you can learn from them and not make the same mistakes. And if you happen to have made those mistakes, let me know down in the comment section. This way I know I'm not the only one out here that's making mistakes and losing money. But the purpose of this video is to try and help you make some more money if there is weakness in the stock market. So I hope you guys enjoy this video and find some value from it. And if you do, be sure to hit that like button, because that really does help out the YouTube channel and it shows me that you guys like this content. So with that being said, let's get right into today's video. So to tell you guys a little bit more about myself, before we get into the 3 things that you should be doing, I started investing about 2 years ago. And in that time, I have learned a ton about the stock market and what to look for. And I continue to learn to this day, and I probably will continue learning for the next 20, 30, 40 years, as long as I'm investing. Now, in those 2 years, I saw the pretty big correction, or not that big when you think of what we went through in March, but the correction that we saw when Trump was threatening China with trade tariffs. And then obviously I also went through the extreme sell-off that we saw back in March. And from those 2 scenarios, I've learned a lot about what I should do when the stock market is crashing. And in this video, I'm going to be talking about the lessons that I've learned from those mistakes and what I'm doing this time to prepare myself for any weakness that we may see in the market, especially with the surge in Rona cases that we've seen. So I definitely expect with that and the election to see pretty volatile markets over the next couple weeks and couple months. Now, I could be wrong and the stock market could keep pushing higher and higher, but in the case that I'm right and the market does go down a little bit, I will be prepared this time, and I want to help you guys be prepared as well. So with that being said, let's get into the first and most important thing that you should be doing right now. Now, when I talk about cash in this video, I'm not talking about the cash under your bed or in your nightstand. What I'm referring to is the cash in your brokerage account, whether that's Robinhood or Fidelity. It's basically just money that's not invested in your account that you could invest at any point in time that you choose to. Now, a good rule of thumb that you'll hear around the investment community is that you want to have 10 to 30% of your wealth in cash. And the reason for this is that when the market is going up, you want to be near the 30% number, because you're just building up your cash pile as stocks go up. But when they start to go down, that's when you start deploying more and more of your cash into the market, which puts you closer to that 10% number. And it's important to remember that you always want to have cash on hand, because if you have no cash, you can't buy stocks. Now, to bring this lesson into my personal portfolio, back in March when the stock market was crashing, I had maybe 15% of my wealth in cash, and that was not even close to enough, because looking back, we know that stocks were trading at incredibly cheap valuations that we probably will never see again, even if there is another stock market crash. And even safe stocks like Facebook are up 91% already. So you could have bought almost any stock and you would have made an amazing return by now. And that's why I feel like I didn't have enough money in the market. Even if you had given me $100,000, that would still not be enough money, just because of how great the deals were back then. And a quick bonus tip before we move on to the second thing that you should be doing is that make sure you're transferring money into your account before the stock market crashes. And what I mean by this is, don't wait until the Dow is down 30% to start transferring money. Because I know, for example, Robinhood has a $1,000 limit on transfers. So what that means is you have to wait 3 or 5 days before that money clears and you can put more money in. Now in March, I had to upgrade my account to Robinhood Gold to increase that $1,000 limit, because I couldn't wait 3 to 4 weeks to get all my money in there because I knew I had a small window to buy up these stocks before the stock market started to go up. And I'm not saying that I knew where the bottom was because I didn't, but I just knew it wasn't sustainable, the kind of drop that we saw in the market, and that I had to act quickly on the stocks that I like. So if you don't want to upgrade to Robinhood Gold like I had to, start transferring that money in now. It doesn't mean that you need to spend it as soon as it's in there, but at least get it in your account so that you don't have to wait for that clearing period to start taking advantage of cheap stocks. So with that being said, let's get into the second thing that you should be doing. So one of the important things that, again, I didn't do in March is to make sure that you're narrowing down your watch list to your top 3 or 5 stocks that you want to start a position in. I know personally, I've got like 20 or 30 stocks on my watch list, and it's not realistic for me to go buy and start a position in all 20 of them. And I had realized that I made this mistake about a week or 2 ago when I was kind of analyzing my portfolio, and I realized that I have way too many stocks. So looking back, I should have invested in fewer stocks and just created larger positions in the ones that I had the most conviction on. And this is especially true if you only have like a $5,000 or $10,000 portfolio. Now, what I'm about to get into is obviously all personal preference and really depends on what your risk tolerance is. But if you're like me and you really want to grow your portfolio, the best way to do this is to not have 10 or 20 stocks, because if you split that $5,000 or $10,000 into 10 stocks, that really gives you more diversity and stability. But it really doesn't help when you're trying to grow your portfolio, because then you get into the scenario like me where I'm up big on my small positions and I'm only up a little on my big positions. So what I've been doing to prepare myself for another stock market crash or correction is I've started selling out of my least bullish positions, and I'm really just holding that money now in cash, waiting to see if my favorite stocks start to fall and I can pick them up at a cheaper price. So like, for example, I sold out of my Uber position recently, which I was up 30% on, so definitely no small gain by any means, but it's just a company that I'm not really bullish on their business model anymore. I personally think Tesla will be the leader in ride hailing, and Uber will eventually turn into more of a delivery service, whether that's food or some kind of packages in some sort, kind of like Postmates. So that's why I'm selling out of that position and using that cash to enter positions that I'm more bullish on. And if you guys want to know what companies I'm watching if there is a stock market crash, let me know down in the comment section and I will make a video for that. But again, I just want to stress that this kind of investing where you only have maybe 3 to 5 stocks instead of 10 stocks really depends on your personal preference and what your risk tolerance is. So with that, let's get into rule number 3. So this isn't really a rule or a process on something you should be doing. It's more emotional, and you really got to understand that as a long-term investor, the stock market will always go up, and that when the stock market is going down, kind of like when we saw in March, you got to be prepared to hold on for the bumpy ride. And you've also got to remember that when stocks go down like this, because I mean, you got to remember, we saw stocks down 50% in March. When stocks are down that much, those are great buying opportunities and you should not be selling. I know it's easier said than done, especially when your portfolio like mine was down 50%. But if you look at the charts, how much are we up from the March lows? So imagine all those people that sold out at the bottom and thought there was more room to go down and that they were going to time the market, and they missed out on all the gains that us longs got, or they had to buy in at a higher price, in turn losing money essentially. You just have to remember that when you invest in great companies, your asset will appreciate over time. It's not a matter of if it will, it's more of a matter of how patient you are and how long you can wait for that stock to meet the true potential that you originally thought it had. And patience is one of the most important things as an investor. Imagine if you bought into Tesla like I did at $220 a share and I sold out at $700 because I had already doubled my money. I would have lost out on so much more from that stock if I was impatient. But because I'm patient and I know what the future value of Tesla will be, I know I'm not selling. The stock could go up to $700 right now after the split, and I would still not be selling that stock because I truly believe that this company has the potential to be a $1 or even $2 trillion company over the next 10, 15, even 20 years. Now, to bring this third point into my own personal portfolio, let's go back and look at the first correction I ever went through, which was like maybe 2 or 3 months after I started investing. And keep in mind, at this time, I was only down maybe $300-400 on my portfolio, whereas now there's days where I'm down $1,000. And back in March, I was down $8,000 from the high before the crash. So back in May of 2019, the market dropped literally like 6 or 10%, and I thought it was the end of the world. I couldn't handle the volatility, and I actually got so nervous about being down the $300 or $400 that I actually sold all of my stocks because I thought I could just buy back in at the bottom, and I quickly realized I had missed the bottom. So I ended up having to buy back in at a higher price. And from that point on, I decided to just commit to not selling stocks just because they're in the red. But more importantly, I decided to learn more about long-term investing and the principles that come with this type of investing strategy. The difference between the first correction I went through and the stock market crash in March was that in March, I didn't sell a single stock and I just continued to buy more and more. And it obviously paid off looking back now. So these are just 3 lessons that I learned from my own personal experience in the last couple of years of investing. And I hope that anyone out there watching this that's a new investor, or even if you're a seasoned investor, that this mistakes that I made just reminds you how important it is to be diligent in your investing strategy. And if you're a long-term investor, that means thinking about the long term. And just because a stock is moving downwards in the short term, this doesn't mean that you should be selling the stock. In fact, it's the opposite. You should be buying that stock more and more and building up a bigger position that you're comfortable with. So again, I hope you guys learned a little bit from my mistakes and can implement these into your investing career. And if you've made these mistakes before, let me know down in the comment section so I know I'm not the only guy out here that has lost money. And if you feel that you guys got some value from it, be sure to hit that like button. And if you're not already subscribed, be sure to hit that subscribe button as well, because I will be putting out 3 new videos each and every week. So with that being said, guys, thank you for watching, and I will catch you on the next one.